Okay, I'm going to hit the start as soon as Jenna gets going here.
Good morning, good afternoon, or good evening, depending upon your time zones, and welcome to the webinar today, Positive Changes in the Real Estate Industry. And I just want to say hello to everybody. And my name is Mike Halper. I am a parent of two WashU students. One's graduated and one will graduate this spring. Also have been involved in the real estate business for 30 years now as an investor in commercial and industrial buildings and as in a development business that builds multifamily properties. So I wanted to start with some notes for today, which is to tell you a little bit about the format for today's session. You're only going to be hearing myself and the other panelists on the Zoom call. And this call should last for about an hour. And I'll lead the kind of conversation and moderate it basically about silver linings that have occurred over the last couple of years, looking through some of the positive aspects of real estate. And I want to thank all of you who have already submitted questions, and you can also submit questions as the conversation continues. And you can do that by using the question and answer box. And we'll try to answer as many of those questions as we can and as time permits. And this webinar is being recorded, as everyone should know, and will be posted on the Alumni Association's YouTube channel after the event. And I think just as kind of opening remarks and kind of set a little stage here, certainly the last couple of years has been a very trying time and provided, I think, some really confusing things in our real estate industry. Certainly new to me and all the time that I've been there. We've had some things that would be, really difficult for our industry. We have supply disruptions. We've had a shutdown of offices. We've had shutdown of retail stores. We've had modified hours of retail, reluctant leisure travel affecting hospitality industry. We have shortage of labor. We have potential interest rate hikes coming in. And then, of course, Amazon.com. So that, among other things, we would think that we would be in this kind of disastrous, really negative world. And yet, for a lot of aspects of real estate, things have gone surprisingly well. Based upon the stock market, the REITs are up almost 30% this in 2021. And in some industries are above pre-pandemic levels. We've also had this emergence of new investment vehicles providing a giant swath of new capital coming into our industry. I'm talking about the B REIT and the S REIT from Blackstone and Starwood, bringing in close to $4 billion a month. And then in addition, just the kind of basic fundamentals, we've had rental growth in many of the markets, certainly in industrial and multifamily, way above pre-pandemic levels in many of the markets. And then finally, we've had investment interest in secondary and tertiary markets that by institutional investors that we haven't seen, ever. So there's a lot of good news at all. And to kind of get through this, provide some clarity of what's happening, what the future can look like, and what the silver linings are, I'd like to introduce our three esteemed panelists today, and really want to thank them for giving us their time and their knowledge and their expertise. And I'm looking forward to hearing from them. First is Fahar Juneja, who graduated from Alumni Business School in 2007. He's in the real estate business. He's an entrepreneur, business investor, and a native of Louisville, Kentucky. He's a co-owner of Gulfstream Commercial Services, a full-service real estate firm focused on commercial real estate and hospitality, investment management, brokerage, and development in Kentucky, Indiana, and Tennessee. Fahar has been representing investors, landlords, tenants, and developing retail and hotel properties since 2008. We also have with us today Elaine Kleinberg, who is a fellow WashU parent and is a managing director in New York at CBRE. And since 2018, she's provided legal oversight, CBRE's New England, Pennsylvania, Lower New Jersey, West Virginia, and Delaware operations. And prior to her role as full-time counsel, Ms. Kleinberg had previously oversaw sales and development and management for more than 50 mid-career professionals and ran the broker training program for the entire New York City metro area. Before CBRE, she was general counsel at Newmark, and at 18 years of Newmark, she was part of a core team of management professionals who grew from the company from small brokerage firm to its now large international presence. And as just the second GC in the firm's history, Elaine created and expanded the firm's national legal department, overseeing a diverse legal portfolio that included brokerage, property management, leasing, global corporate services, and facility management. And I welcome Elaine. And then our final panelist is Bob Schneiderman, who graduated from the Olin Business School in 1985 and is an executive managing director at Colliers International. And he specializes in advising tenants and occupiers on their commercial real estate matters. He has an extensive background working with both local, national, and global corporations. And Bob has over 30 years experience in the commercial real estate industry and offers creative solutions for his clients. Bob's has a lot of experience in this sector, 6.5 million square feet of leases, value of almost $1 billion. And he's has earned a reputation for professionalism, diligence, and attention to detail to provide superior level of results for his clients. So first and foremost, thank you all of you for joining. And let's jump right into a question. First of all, why don't we start with telling us a little bit about your business and tell us how things are faring for you in this environment. Why don't we start with Fahar?
Thank you, Mike, and thanks everyone for having me. I always appreciate the opportunity to talk about our business. So again, I'm glad to be here. So primarily what I do is I'm a real estate broker and developer in Kentucky, Indiana, Tennessee. And our business, as Mike has kind of mentioned, globally applies to my world as well. It's been done surprisingly well during the pandemic. There was a short panic situation kind of in the early days, but since then, the big trend I see is an acceleration of existing trends prior to COVID. So as far as goes, that means more experiential real estate, more service-based tenants, smaller footprints, but the really A locations have done well, have leased up well. New developments in the right areas are getting a lot of interest. Fast lease up even during the pandemic. I'd say even in closed malls, the best mall in each market is thriving. And then you've got the secondary or tertiary mall in areas that they're overbuilt. Those are the malls that are really struggling. So it's really kind of a tale of two worlds on that front. And then on the hospitality side, that's been a little bit different. That has been a challenge. And I think in areas that are leisure driven, that has come back to a degree, maybe not as much as 2019, but I think there's a lot of momentum in those markets. And then markets that are more corporate travel driven and have been slower to recover. And really, that's also kind of a very market dependent metric. So overall, I will say the market has gotten more efficient. It has been resilient. Commercial real estate is a great asset class to be in right now, but overall, I'd say things are good, and that is not something I would have said or expected to say in March or April of 2020.
Great. Thanks, Fahar. Appreciate that. Lane, New York, you're in New York, Northeast, and tell us how things are there. You're muted.
There I am. Says I was
Welcome.
muted. Sorry. Thank you. It's a pleasure being here. And I think Fahar and I and everybody here is like the shock in March of 2020 was painful. And I think, we all thought, my goodness, what's going to happen to our world? And I think after you woke up and, and everybody's at home because they're out of the workplace, we started to hunker down and think, how could we service our clients? So CBRE is a global real estate advisory service. And we do property management, facilities management. We represent owners, we represent sellers, tenants, retailers. And I think the big thing that we started to see is thankfully there was a diversified business, because when you look at companies like real estate advisory firms, you're going to go, what's going to happen? And what kind of saved us is we did take like the office sector did not do well, especially in New York. New York was like high finance. No one was going to the office. People were not doing anything at that point. And I think there was a lot of panic, but in other aspects of the world and in the country, people were thriving. So areas like the pandemic that impacted us, which is like the strong industrial sector, when you're dealing with ordering things online now, what is going to happen? You need warehouses. So areas like Pennsylvania, New Jersey had the all-time best years, frankly, in the last couple of years. Because they're trying to find places that are available for warehousing. And the other one is, as we all know, I wanted to talk about is, because Boston is one of the markets where I'm a lawyer for, is the life sciences area is just been booming as well throughout the country. And I think what's happened is there's been a big mindset of like, what are we going to do as a country, right? We're trying to get that vaccine out, and there's been so much money. So poured into that, which is another thing is I think that, the stock market's done remarkably well. Well, so is the real estate market too, because there's been tons of venture capitalists coming in. Anybody's coming in. You can buy anything now. And I'm sure you could talk about that, Mike, about the money that you mentioned in the beginning. So we are really seeing that that is really dumping in. Anybody can buy anything at this point, but I think that's a great trickle down effect to a lot of the smaller markets like you're seeing, Fahar. And then the retail, as you mentioned, one of the things I think we're seeing is that it is rebounding. We're living with this thing, right? And there's been a partnership, I think, with a lot of the local governors and mayors, which is like, how are we going to get these retailers out there? So in New York City alone, there's a ton of outdoor dining, which I think was unheard of years ago. And so a lot of retail, like restaurants are doubling their space just by being outside. And so I do think that, a lot of mayors and local governors are looking at saying, how are we going to deal with our businesses? And they are working really closely with owners and trying to get them out there to make sure that they're not going to, sort of die during this pandemic. So that's been a shift, and I think it's a wonderful shift. So, all in good. And as you all know, the labor market is pretty strong now too. And so that's changing how things are. And we could talk about that in another segment, but that's just, I think I'm all positive. I mean, you know, surprisingly, 2 years ago, I don't think I would be this positive. So.
Thanks, Elaine. I think you brought up a couple of things that I want to get back into and dive a little bit deeper, and appreciate that. And now, Bob, you hail from Southeast in Florida, and so how are things going? How are things going in your business and in your region?
Thanks, Mike. Interestingly enough, my headline is "Real estate is not dead. Real estate is not going away." And there were all these naysayers up front that the office is gone. Nobody needs office space. Retail, forget about it. Everyone's going to buy everything online. Guess what? It's not true. So the reality is we've been experiencing a wave of people coming from all over the world moving down here to South Florida. We have a beautiful environment, no state income tax, great climate, and people realize that work can be done almost anywhere now. So the demand is certainly exceeding supply. We see it on the residential side. We see it now, some of the lowest vacancy rates in the industrial market. The office market is bouncing back. We have so many things going on, it's crazy. But back to the original concept about the business, you know, no one really had a playbook on what to do when your once in a century pandemic hits. And with all that uncertainty, we were certainly extremely busy helping advise people and walking them through some of this uncertainty and how to get to where they want to be in the future. So it's been extremely busy, but like the other panelists have said, I'm very optimistic about where we're heading and what's going on. And, you know, certainly we're going to have challenges ahead like everywhere else, but I think it wasn't the gloom and doom that was initially explained to everyone up front. And it's exciting to see what's happening. And after being through many different cycles, this is certainly an opportunistic one that's starting again.
Great, thanks, Bob. So I think let's tackle one thing that I think came up from everyone's comments, which is I think interesting for most people, which is just the office world and the office market. What you know, in the Northeast, what I heard you say, Bob, is that people are coming into Florida, and there's a lot of reasons for it. You got beaches, you got sun, you got a nice environment, you got no taxes, you've got an open environment there. And from what I've read, a lot of this demand is coming from the Northeast, from New York, from Connecticut, states with high taxes, states that have moved some corporate centers. I know that in California, where I live, we've had a lot of companies have moved their headquarters to Texas. So are you seeing from the work from home, are you seeing in Florida that you're having a hybrid model, or are people in the office? And then we'll go through for each of you, what do you think this looks like work from home a year from now, 2 years from now?
All right, so let me dissect what we just heard. A couple of things. Number one, our business development board in Palm Beach County down here where I reside, they are referring to us as Wall Street South. Between Goldman Sachs and some of these other firms that have made commitments to build or occupy space, it's remarkable what's going on here between Palm Beach County a little bit north and then south to Miami-Dade County, between private equity companies, California high tech, startups, between the labor pool and the schools that are down here and the environment, as we already outlined. It's incredible what's going on. And I'm working on a transaction now, believe it or not, in Palm Beach County. They're in New York City rents. Related is building a new building, and they're getting rents in excess of $100 a square foot, which is unheard of for Palm Beach County. So it's remarkable what's going on. You said the magical word a few seconds ago. Hybrid is definitely the word, the new buzzword. And there was a study that Gensler, a national global architectural firm, did, and 2/3 of reentry plans include some sort of hybrid model. And I would say hybrid is here to stay. Right now, many companies, given all the uncertainty, they do not require all their employees, except in critical situations, to occupy space on a daily basis. And that's one of the challenges we're facing day in, day out. If we have a client that's looking to potentially take on a new lease, they have an expiration date, it's a challenging time, but they still need to do something. They go to a building and there's no cars in the parking lot. Well, why isn't the landlord offering us great concessions? There's nobody here. Well, occupancy and leased are different things. Just like if you see a sign on a building, that doesn't mean necessarily there's available space. That just means there's a sign on the building. So, we have to go through an education process and explain to people, right now, it's not safe for everyone to be in the office every day for social distancing, for the pandemic, and for other reasons. So everyone's not here, but the building is 90% leased. And, it's definitely a challenge, but yet hybrid is going to be here. It's been here for a long time for many people. There were many days where I worked from home on a Friday, but now it seems to be more permanent and other people are catching on. So that's one of the silver linings. We're certainly appreciating life a little bit more and looking at things differently, and people are going to appreciate, what they have, and, spending more time in the United States with vacations and not working 24/7 and being a slave to your phone and having calls and texts every day of the week.
Great, thanks for that. I just heard BlackBerry shut down, so I can now don't have to use my fingers so hard on that old phone. I guess I just showed my age there, didn't I? So Elaine, can you pick this up on this kind of work from home concept? And I think one thing to also think about is one thing I wanted to kind of get a feeling for is that headwinds. I hear that there's this work from home and there's a lot of demand, but if hybrid is for the future and it's only 2-3 times a week, is that headwinds in kind of just the overall demand for office space, going forward?
Well, okay, so definitely, and I agree with Bob, it's here to stay. We at CBRE had surveyed our occupants, our clients, with 87% of the large companies with 10,000 employees or more say they're adopting hybrid work. So that's large companies. But how does that correlate to taking space? And you think, well, that should be a lot less. And the answer is no, it actually is only about 9% of the companies anticipate a significant decrease in office space. So here's where what we're looking at in terms of the hybrid model. I think people are trying to figure this one out. It's, I think what's happening is the ideal model is we want you to come into the office, but there's got to be guide rails, right? It could be like 3 days a week, 2 days a week. And, there's a lot of intelligence now out there and technology that measures actually scanners, how people are actually using the space, when are they coming in? So there's more precision so that Bob could do his job and say, okay, we see in real estate decision makers can actually do their job to say is how much space is necessary. So I think the hybrid is there to stay, but it's different than so here's the thing, when I first, graduated and I went into the workforce, I had the ugliest place ever. It was like a brown room with cubes lined up and there was no window. And so everybody really cherished those lovely windowed offices. And I think this is shift now. So what are people using in the hybrid model? They're shifting away from private offices to hoteling, to like beautiful, really maybe green spaces, wellness rooms. So we're using the real estate in a different way now. So you will have those offices with maybe a 10% of whatever this survey is. Maybe it's right, maybe it's not, but you're going to have people who are going to take space to communally work together in areas, right, in office that are, better spaces to form more collaboration. And I think the windowed office with the executive is probably going to be gone. And I think it's interesting for people who are lawyers, because it used to be you need your private rooms. That model is also going away too. You can work at home, you can come together. And with that said, I do also just want to mention, because I always say life sciences, that's my thing here, but also with tech and these companies like lab, it's not necessarily the model. Like, so we have to look at hybrid. Does it work? It works for companies that need it to work, right? But still traditional office, like where you have to be in that's the demand for it. But I do think financial services firms are waking up and they're not shy on taking space. New York, they are expanding too. Technology firms are expanding. I think that the hybrid model is what employees are demanding. And I also think remote is really a possibility too. So you're right, Bob. My financial planner moved down to Miami. I'll miss him, but I don't need him. So it's anymore. So, and that really leads to places like that are cheaper too, like Fahar, right? Like Lexington, Kentucky, they can go there now. But anyway, I divert. The point is that you have hybrid space that I think it doesn't mean less space by somebody. I think it means better space and more communal space that's really enticing to get the workforce in. So,
Right. Thank you. And it feels like, I know in New York that the kind of the best buildings the rents have really skyrocketed, and in some of the commodity buildings, they're kind of the vacancy has increased. So it's kind of a tale. I think Bob, you talked about it, or Farhar talked about it, it's a tale of two kind of dichotomy in the in the product. We'll see who wins this one. Salesforce says you never have to come back to the office ever again, and Goldman Sachs is saying come back tomorrow. So we'll see what the winner is and revisit in a couple of years. Fahar,
Mike, can I add one thing real quick?
Yes.
So what Elaine mentioned is spot on, because historically a traditional office would have 80% windows and conference rooms and 20% for gathering spaces. Mm-hmm. Today the model is shifted. It's almost the inverse. So 20% for collaboration. And right now, we touched on this earlier, with the challenges in attracting labor, you need to create an environment that is welcoming, that gives people a reason to come together. And unless you have that, you're going to lose culture in a corporation, you're going to lose innovation, you're going to lose so many things. But the reality is the workplace is now being reevaluated, and there's been a lot of studies and interviewing people, how they have to work and setting things up. And unless people adapt to that, you're not going to be able to attract the labor. And that's going to be the real challenge. I mean, right now, Amazon came down here. They're paying $18 an hour for drivers. All the country clubs, restaurants, and hotels can't find labor anymore because Amazon's paying $18 an hour. And it's a real challenge. So unless you have these environments, you're not even going to be able to retain if you're able to attract talent. So it's a real challenge.
Yeah, I appreciate that. I think you're right. So Fahar, kind of coming on to this, continuing with this thought, one of the things that has really happened with work from home has been this ability to do remote work, and whether or not people have moved from San Francisco and from New York down to South Florida, or are they coming into markets like yours? And this affects both, your own businesses, hospitality world, the industrial world, and certainly the multifamily world, as well as the office world. I wonder if you can give us a little perspective on what you see and what you think in terms of people moving into areas that haven't had that kind of growth before.
Yeah, and my city particularly has always been sensitive to a talent drain where, hey, the best talent moves to New York City when they graduate from college, or Chicago, or somewhere else. And my personal experience has been a lot of that has come back. A lot of those people who have ties to Kentucky or ties to the region came back during the pandemic. A lot of them were looking for ways to come back from New York City in particular because they had kids and they were getting older and wanted to raise a family in Kentucky and hadn't figured out how to do that. And then when the pandemic hit, they told their employer, here's what we're doing. We're moving home. Hopefully you'll still employ me. And that's what happened. There is an opportunity for our markets, Lexington, Cincinnati, even Indianapolis. Nashville is kind of on a whole nother level, but Louisville particularly has a very high ratio of amenities to cost of living. I mean, it's one of the cheapest nice cities to live in the country. And so I think people, it's tough because people want to bring jobs. Jobs bring, employment, tax roll, income, but there is a struggle to bring new employers to the market, but it's not a struggle to bring employees to them. So can you capitalize on the remote work world and say, hey, we've got employees that are working for these headquarters in other cities, but they live here and they spend their incomes here. So it's a balancing act, particularly for the multifamily side. I mean, there is that world has been hot in a lot of markets for it feels like a long time. People have been talking about is there a multifamily bubble for several years prior to the pandemic, and I think the answer right now is no. There's a ton of runway still left because you continue to go to smaller and smaller markets where there's just the supply is nowhere near the demand, and so that's what we're experiencing here as well. And then you could see that in retail. It's surprising with the smaller markets that we have. I mean, all of the new developments you see get full pretty quickly, mostly because we're still playing in markets where there's the first time that XYZ store has been there. They, a lot of these are public companies. They still have to open stores, and they got to find new markets to open stores in, and kind of benefit from that.
Right. Great. So, it's been really interesting. Places like Nashville, Boise, Sacramento, Austin have in a lot of the markets have just gone crazy. Like they've hit levels of rent and occupancy and new development that never thought would occur, and it certainly has happened. In part because of this pent up demand and for the because of the pandemic. So it'll be interesting to see, I think this will be one of the questions is whether or not urban centers come back and really have that same attraction where you graduate from school and you go right to New York, or you go to Chicago or Boston or Dallas, San Francisco, LA, or whether or not you start going into some of these secondary markets. So we'll see what happens in a few years from now.
Mike, that's not to interrupt, but that's one real, I think inside each market as well. If you look at urban downtown Louisville, the office market, retail market still struggling. Restaurants have all come back, but the suburban areas of Louisville, Lexington, all those places are booming. So
right.
Even as a microcosm in each specific market, that is something that people have always traditionally said downtowns and urban cores have to be thriving in order for a city to thrive. And will that continue to be true?
Yeah. And do you think it is? I think the urban market is even in your own local areas. You think is it the suburban outflows, or are these cities going to be attractive for people going to move back in?
I think they will move back in. I don't know that the office occupancy will ever reach whatever the peak was prior to 2020. But I think there's a hard push because I agree with the sentiment that the urban core has to be thriving in order for the city as a whole to be successful.
Bob and Elaine, do you have a thought on kind of the urban markets of the movement that went out of the cities to the suburban areas during the pandemic? Are people going to come back? Look, just to give you an anecdote, in San Francisco, it is really shut down. I mean, our main drags have plywood boarded up, and it is like a ghost town there. And it's, it'll be interesting to see how things come back. And the suburban markets have really fared really well in the Bay Area. What's your feeling of the future, Elaine and Bob, for your own regions?
I think in New York, we're going to bet on it and I think that CBRE is betting on some of these major markets. So Boston, I think, is popping up because, again, this life science stuff, and a lot of universities and people are remaining after school. I think the idea of, it's funny, last year, New York, even residential, we're not talking residential, but prices were really stagnant and people were losing. And then all of a sudden people woke up and said, I can live with this pandemic. I guess I can go to the Hamptons still. And residential, the demand was at one of the highest in terms of buying apartments. So people are going back into the city, I think, because they're like, what am I going to do in the suburbs while I'm cloistered away during this pandemic? And I do think that it wakes up people. They say, what am I going to do with my life right now? This is not the most exciting place. No offense, but so So, you know what so we look and we see where are things happening. And I think that is on urban, especially, revitalizing a lot of this stuff. I mean, the residential we're seeing in New York is really high, including like some of the boroughs. So that has to be an indication that people are returning back, but yet vacation homes, if you look at that, are at an all-time high too, right? So
Right.
I think that's the model. Maybe it's you work in the city, you could still enjoy it, you could do your hybrid thing. And then, you go 4 or 5 days a week, you could go in your lake house. Because I can do it now, right? I can go there. So
Yeah. As long as the Fed keeps interest rates at zero, we're all good for the second homes. Bob, what are you seeing? What's your feeling?
I would say it depends on the demographic. So a lot of the younger people want to live downtown Miami. It's attracting a lot of international people, younger people. So depending upon your demographic, I think that's going to impact how you answer the decision down here. I think the other older generations are more inclined to stay in the suburbs. We're working with a regional accounting firm now. They have their headquarters in New York City, and more than likely, they're opting to move their headquarters out of New York City. They don't need to be in the city anymore, but it's case by case, depends on the industry, depends on the age of the partners or the C-suite type of people. And, there's not one size fits all, but down here, I don't think that, downtown is going to ever be dead. And some of the outskirts of Miami are now being developed, and it's incredible to see what's going on.
Great. So let's move on to kind of a little conversation on the silver linings that you see out of your business. This is kind of the topic of this webinar. The pandemic really devastated people and economies and jobs and families, and it was just so, and we're still living with that, and we have new variants, and it's scary. It's a scary place, but it also had shifted and accelerated a lot of things that we've talked about in the last half hour. And I'm wondering what, on the positive side, what are the silver linings or two that you saw in your own business or for the industry as a whole? Fahar, do you want to start?
I'll say one of the things that jumps out for me is we became a lot more collaborative with our tenants. One big difference from the last downturn that I experienced, which was 2008, was that all the stakeholders in each, whether it's the tenants, the landlords, the lenders, and then really the government that controls what the lenders are allowed to kind of how strictly they need to enforce their loan covenants or whatnot. They were all aligned this time. The tenants were able to work deals with their landlords. Landlords were able to do that because their lenders were giving them slack, and the lenders could do that because they were in turn getting slack. So we got better relationships with the tenants, and I've seen that bear fruit with renewals, lease negotiations, and honestly, we're landlord heavy, and a lot of those relationships turned into tenant rep relationships for second, third, fourth locations for a lot of these tenants because of collaborative efforts that we had to go through. So another kind of piece of that too is everyone who's still there, who's survived, as far as our tenants and the people we work with, are better at doing their business than they were in 2019. More efficient, more nimble. They've kind of been forged in fire, if you will, and I think that makes us feel better about the strength of our income streams.
Great. Bob?
I would say, the CFO at Morgan Stanley spoke to us. I believe he's got kids that are at WashU, and he was on one of the Zoom calls. And he said very simply, I don't need to travel all the time every week and go everywhere to see my global partners. And this is a perfect example. We're all here collaborating remotely, and we don't need to get on a plane to go to New York or St. Louis or wherever we're going to meet. So the interesting thing, one of the silver linings that I feel is, you don't always need to meet in person. And even look at, I have friends that are lawyers. They don't go to court anymore. They don't have to drive. They don't have to park. They can do it just like this and have their hearing. So we've all recaptured a lot of time because we've learned to be more efficient and we've learned to adapt to new technology. So to me, that's really a big silver lining. I've gained so much time every week now that I would have lost otherwise traveling around and driving all over the place. And you know, a couple other little nuggets that I would say is, you know, people had a lot of time to acquire new skills or redefine old skills. I've had lots of different webinars or training sessions and certificates, and we were all busy doing that. So that was sort of interesting as well. And, you know, you learn about the importance of being connected. And you also learn about the value of some of your relationships, you know, who you can count on, who you can't count on. So there were a bunch of silver linings, but I'll leave it at that.
Appreciate that. Elaine?
And I can't beat that, Bob. That was really terrific. You know, and I do agree. I think that the family focus is definitely in play, right? Like parents are home for their kids for dinner, right? And that was not really something that was that common with working parents. So I think that's terrific. And I actually do think there has been a shift now. Look, the labor market is really booming, right? So what you have now is you've got people who are, employers are really focused on how do we attract employees, and it's a different game. So the silver lining is for you and students who are looking at this is there are huge opportunities. There's a lot of technology now out there too to create more science in way we predict and how we use real estate, because that's the most important thing, efficiencies. And we are also looking, we didn't talk about ESG, but really a lot of the stuff that we are dealing with now is investments also in really sustainability and looking at our planet, because that's been going on too. I did also want to mention that something that's happened the last 2 years that we have forgotten about, but it's important, is diversity too, because there's been a lot of political stuff going on, right, with Black Lives Matter and all that. What that has done to the real estate business, I think, has changed it all. And I'm sure, you know, Bob, you and Colliers, we are really desperately looking for diverse talent. And that was something that I think was really bubbled up in the last couple of years. And that's really great. So it is a talk and it's a commitment that I know CBRE has in other companies, which is we really do need to, in the field of real estate, how do we become much more diverse? And that's really a terrific thing. That's a great byproduct of what is happening in the world at this point too. So lots of really, look, and the money is flowing, and, you know, and I think the other one is the resiliency that we have. We're like, the world isn't going to come to an end. There's another variant. Okay. You know, and that makes us feel a lot better. We're all sort of stronger in a way. And, you know, and I'm curious about the prediction, because we're all, remember, you know, one of the things we were predicting is the millennial thought process is I want it now. And so Amazon has gone off the charts. That has gone to the newest level. I need to binge my show on Netflix, and that's happening too. But also at the same time, I think we've also looked at, you know, more of a slowing down a little bit. And I'm hoping that's the case, right? Where we're just focusing on enjoying life instead of just, you know, I need it now, because, you know, you may not get it, because a lot of the building supplies are now on ships that we can't even get this stuff, right? So it's just, there's delays, and we have to deal with that as well. So
that's honestly, I want to just piggyback on one of the things Bob said, but to the point of not having to travel and being able to collaborate remotely, just the efficiencies in the industry. The thing that jumped out when he was saying that is, I don't have to sit at a zoning hearing or and wait for everyone. I can remotely, and have our engineers and architects remotely all be in different places and, you know, participate for the 10 or 15 minutes that we have to participate. That's better for everyone, including, I mean, all the stakeholders. It makes the process more efficient, and hopefully those changes you know, remain the norm moving forward. Just the transaction process in general. I mean, banks, lenders, LPs have gotten more comfortable signing documents digitally, accepting digital signatures for things like that. So I mean, honestly, the amount of physical closings I actually even have to attend anymore has gone down quite a bit. Not that I don't like doing that in the first place, but the ability to open up your investor pool, open up your stakeholders to really from anywhere and able to close those deals from really at any time is, it's an improvement in the way things.
Great. Yeah, we'll start moving from the electronic signatures to putting a title onto blockchain pretty soon. So, I think that the world, certainly technological advances are just incredible and they're accelerating. So why don't we move? We have a number of students on this call, and I think they'd be really interested in. Why don't we start out with like kind of what your? Let me put it into two parts. This question. One is, what advice do you have for a student to get into our industry? How would they go and approach and getting a job in the industry? And then what sectors, because this industry can be hard to move from one to the other after a while, from multifamily to industrial, hospitality. They're all so different, to leasing, to all the different aspects of it. So what do you recommend for students to get in the industry? And then what sector would you recommend that they take a hard look at? Elaine, do you want to start?
Sure. Look, so real estate is basically it's an industry of anything. So we need everybody, right? So if you're really a creative type, you could market and you could sell properties and be involved in that aspect of it. If you are interested in communications, you could do that too. There's a lot of technology out there too. Prop tech is a huge area. So if you are really one of those computer scientists, you can go into that area as well, because we need them. And we just actually, CBRE just bought an entity a company that does that. So in terms of science is very important in Bob's business. Like, we need to have those people there. And anybody who's into financial analysis, very important when you buy property. If you're a good salesperson and you love to be with people, brokers, that's a really great career too. And it has so much flexibility. So I do think, though, how do you get into, if you're really sort of like, I don't want to be a commission-based person, you can manage properties if you're interested in like facilities. So there's data centers, a whole new area, which we haven't talked about at all, which is booming as well, because we're all watching Netflix and we all need, cloud services and the like. So it is an area I would recommend that if you're interested, you could just reach out to start getting informational interviews. You can reach out to alumni. What do you do? I think it's important, though, before you jump in, is to really do some informational interviews. And I get calls all the time. Anybody, I think we all will say we're happy to get calls, right? Because we want to make sure that you understand what you're getting into. But I would say at this point, this is such a dynamic environment right now, and probably one of the best at this time I've ever seen in my 31 years being in this field. So really, I encourage anybody who has any interest in it, or even like, what is this, to reach out to us, because we can talk to you and probably put you in the right lane, if you will.
Great, thanks. Fahar?
Yeah, I think that second everything Elaine said. I mean, that's wonderful advice. And as far as the informational interviews go, I mean, you are kind of entering the workforce in a time where it's probably more flexible for your age than it ever has been, at least during my lifetime. So, you make a decision on, and it doesn't have to be a permanent decision, obviously, but where do I want to live? Where do I want to set down roots, or set down my next couple of years, and then find, the people who are, and maybe it's in every sector, find some top brokers in the industrial sector, the hospitality sector, figure out what you're interested in, figure out, when you talk to those people, a lot of them, really do want to help, and they will tell you other people in their network that might give you resources. Really, it's, in today's world, there's an unlimited amount of resources searching for that. So, kick the tires and figure out exactly what speaks to you. because at least today, at least in today's environment, at least for the next couple of years, you'll have the opportunity to shift if you decide you don't like it. So don't be afraid to take a risk, and don't be afraid to ask anybody for help.
Thank you for that. And Bob?
I would say do your homework first a little bit, because when you call someone and say you're interested in real estate, it's so broad and so vague. Real estate encompasses so many different areas. It would be helpful to do a little bit of homework. And the other thing that wasn't mentioned, I like internships. Sometimes they're hard to find, but if you can reach out and find internships, you can try something and see if you like it and get more information. But informational interviewing is great. I mean, I started as a finance and investments guy. I had job offers on Wall Street for corporate finance and investment banking. And when I was getting my MBA, I got into real estate by accident. So, you know, you never know where you're going to end up. You just have to ask a lot of questions. And that's sort of what I did and how I ended up here. But, you know, if you find out what you like, and there's lots of different things like Elaine mentioned, you know, marketing, finance, analytical, numbers, you know, construction, there's so many components in real estate. Ask a lot of questions, do some homework, and see if you can find an internship, and that'll let you know if it's really something you're interested in exploring, and if it's an industry for you.
And I just piggyback something because, you know, CBRE has internships, and I know Colliers does do, but other places may not, but that doesn't mean that you can't get one. And a lot of times, please be mindful, like if it's a small shop, you're going to get a lot of experience too. So do not be afraid to go out and reach out to people on LinkedIn, connect with them and say, I'd love to work with you for the summer. Do you have anything? And these are really the places to learn. So if you're like, I really want to be a broker, and you reach out to Bob, watch, you're going to get like 20 calls, Bob, for internship. And then you find out the summer, like that was not at all what I wanted to do. That is such a great experience. There's also things like, we forgot to mention project management, which you love projects, you're a great project. You know, every one of these things, if you build out space, that's also in the real estate business too. So I do not be afraid. You can do your research, but then you're like, numbers don't speak to me, but I really like that. And maybe go and ask people for internships and go through the alumni network as well. But I think I'm a mentor to like 5 women actually. And it's all over the place. And one of the things I say is, you know, like you got to do some hustling here. It's not going to be given to you. But if you do, the rewards are going to be tremendous, because we want to see people who really are on the move and have it. And that's the person that reaches out. And I'm always like, reach out to me in 5 years. I want to hear what's going on, because I know they're movers and shakers. So don't be afraid of this. This world is it's really smaller than you think, because we're all electronically connected through LinkedIn. Right? You can literally, and you could reach out and have a coffee date and say, I just want to pick your brain about things. But be mindful. Again, I appreciate what you said is of like not just being a fishing expedition. So.
Okay, great. Thanks. And I like that you know, you're seeing what happens, predicting things 5 years looking out 5 years in the future for these people. And I'd like to segue onto that, which I can't resist, but just need to make a prediction for, 5 years down the road, because it's being recorded. So we can look back at this 3 years from now and see how we did. But just to put it out for the last question for the panelists before we go to Q&A. And if you have any questions to ask, please use the Q&A and we'll get to them in the last couple of minutes. But just quickly, looking out for predictions of best bet for our industry in the next 3 to 5 years, where you're gonna place your bet. Elaine, why don't you start?
So I was lucky because I heard some information 5 years ago about data centers, and I put my money in that, and that has been explosive. So I don't think data centers are going anywhere. Even if you're like not a real estate person, look at the stocks. It's a stock tip, but really, those are really important aspects of it. Interesting. We did not talk about self-storage. It became a boom this year. In fact, in New York, Manhattan Mini Storage sold their portfolio for $3 billion. That I don't think is going anywhere. I don't know in the long run how it will be. I'm still placing my money on life sciences and construction. There's 24 million square feet that is out there right now. And I think industrial is going to make the move as well. Remember, technology is just, we are to stay. So it's going to be more efficient, and these tech companies are still gobbling up space. So from an office perspective, I think Dan, Bob, you could probably talk about that. But I honestly think, look, also, if you're going to look at it, people looking at like hotels are not doing great. That's sometimes when the people come in and they go, if it's not doing great, I can get it really at a song, and then it becomes big. So, sometimes it's not always great to bet on the one that's the best right now. You may want to look and see, is it going to turn around? So I'd be curious. I think retail is turning around too. REITs are popping into the market and gobbling up some of these buildings too. So it's all good.
Great.
So
Go ahead. I'm sorry to interrupt. Go ahead.
No, I mean, and so I just don't think, again, it's also, some people also looking at big markets like Boston, they're like, it's at the all-time high. I do think the predictions are going to be some of these smaller markets that are like Raleigh, New Durham, like all of those things are popping up as well. So
life science, data center, select distress deals, and maybe some of the regional tertiary secondary markets. Great. Fahar?
Yeah, I would put probably industrial, at least in my region, at the top of the list. Louisville's always been a distribution hub, but whether it's distribution, whether it's crypto mining, there's a ton of interest in industrial facilities, and there's not enough supply in almost any market that I'm hearing about. So that's probably at the top of my list. And I'd also say that the last mile delivery that isn't necessarily in a traditionally industrial built facility. I mean, there are people looking at dying malls, big box centers that can fit, and that's potentially, that's a select distressed asset that fits under the industrial umbrella, but it's a good adaptive reuse for, things aren't getting cheaper to build. And so those structures are worth something.
Right.
Generate cash flow and dividend.
Yeah, the industrial has definitely been a hot area.
And one last thing,
Yep.
Sorry to interrupt, but the supply chain issues, I do think, are going to push some more manufacturing back to the United States. And I do think that's going to have a big play on the industrial market as well.
That's interesting. Manufacturing facilities, and then the industrial with the super high demand, especially for that last mile, and then low capex costs make it a kind of a more predictable investment. So that's that's interesting one. Bob?
I would just add to the list multifamily and student housing. Those are pretty hot, and I suspect those are going to remain hot as well in the future.
Yeah, I would concur with that as well. I think multifamily we just have this a real housing shortage throughout most areas of the United States, and we've had it for a long time. And because of a lot of reasons, there just hasn't been the supply added that's necessary. So we'll see. I think that also has some tailwinds as well.
Yeah, and somebody did ask a question about that. Student housing, is it more expensive since the pandemic? Probably, because of supply and demand. People don't want to own, they haven't bought, and now prices are so expensive, so they can't afford to buy, even though interest rates are cheap, so they're renting. So because of supply and demand, it probably is more expensive to find student housing off campus around big schools right now. Many schools, I would think.
Right, and really hard to develop around some of these areas as well for new supply. It's really interesting. Elaine, we had a question for you specifically, which is how to move from how do you move from one sector to another in real estate, from general counsel to operations, or how do you make a movement within law?
So look, you're a lawyer. It's probably the key to like anything. I've seen a lot of lawyers go into brokerage because they can understand the deals, and they can understand leases, and they can understand contracts. So it is, I've seen a tremendous amount. So if you're interested in that side, I think brokers love you because you're also part of a team of people who can analyze information. So don't be afraid just to say, I'm fixated, I'm in law, like I can't move, you can. And just really successful brokers that I've seen. I actually read about some guy who was actually a cardiologist. I'm not kidding, like for years, and now he became a real estate entrepreneur. So you're only limiting your own self. I was like, that's very interesting. You know, a lot of also times, like as a lawyer, I moved in because I was general counsel, and then I moved into managing brokers, and now I've done like almost a hybrid. So you can, if you're interested in that, you can go in-house. And then a lot of times I've seen lawyers become like COOs of people that like of equity funds and things like that. So there's also a huge area that's, I don't want to say huge, but you can actually move into that direction too, because legal skills are really applicable to a lot of things.
Great. Thank you so much. So that's going to be a wrap for our webinar today. And I just want to say thank you so much, Fahar and Bob and Elaine. That was really interesting conversation. I feel like there's so much there that we could probably have gone for hours, but this is our allotted time. And I think you did a wonderful job today, and I'm sure everyone was really learned a lot. And then I would also encourage everyone to check out other WashU virtual events that you get, notice of through the emails, and then encourage everyone to join the networking platform that's available for all WashU alumni, parents, and students called the WashU Connects. And what that'll enable you to do is to expand your network both locally and globally, share your professional experience with college students and fellow alumni, and learn about a new field before, if you're anticipating some sort of career change, and be able to give that advice as well. And then share job or internships opportunities with students and alumni. And you can register into the WashU Connects really quickly and easily, and there'll be a link to do so that will be shared in the post-event survey that you will get if you have registered for this event. So with that, I want to say thank you to our three panelists and wishing everyone a happy new year, and stay healthy, and we will say goodbye. Thank you.